expect you already know that, and I welcome you to this latest edition of the Gary Baumgarten Report. Giving Tuesday. Every day it's another day. We're doing this live on Cyber Monday, I think, and tomorrow, for those of you who are watching this live, maybe today for some of you who are watching this on the recorded version. But at any rate, it's called Giving Tuesday. And that's the day where the various charities ask you to, before the end of the tax season, this is the time to give them some of your extra moolah shmoolah, and you get a tax deduction, and they get your money, and they can go out and continue to do their fine works. But a lot of people are very concerned about whether their money is going where it is intended. What percentage of the money goes to the good works of the charity, and what percentage of the money goes to executive salaries and so forth. And folks like me, on occasion, do stories about certain charities and other nonprofit organizations who are stuffing their pockets more so than helping people, and that causes folks to be reticent to give sometime. Well, we all want to give, and so as a result of that, I thought it would be great to invite Amish Mehta on to the discussion. He runs the nonprofit practice at Friedman LLP, a very large CPA firm and a very important one. Amish, thanks for joining us.
Thanks, Gary. Pleasure to be here with you today.
Coincidentally, just today, and I'm sure you've seen these too, I got an email. This is one of the kind of things that people grab and then they send and they go viral, with a list of all these very well-known charities. And it says, give to these, don't give to these. And it says, like the Salvation Army, a very small portion of the money goes to the executives of the Salvation Army. Probably over 90%, from what I recall, goes to the intended recipients. And others, and I'm not going to mention because I don't want to malign anybody without knowing, but some very well-known charities, they claim that a goodly portion of that money goes to line the pockets of the executives. How do I, as a person who wants to give before the end of the year to get that tax deduction, or just because this Giving Tuesday reminds me that maybe I should be philanthropic a little bit, how do I know who to give it to?
Sure. So it's Gary with Giving Tuesday, which started back in 2012. It's kind of a grassroots movement. It certainly has exploded into the national phenomenon that we know it. So for those individuals that started the shopping spree for Black Friday, and today with Cyber Monday, the nonprofits want you to keep your wallets open and you give a little bit to certain causes. So it's certainly a concern that folks have. How do I decipher where I should donate my dollars to? And it's a very good question, and certainly that's something that people should take seriously. So, first and foremost, certainly give to charities that you're passionate about or have a personal connection to. We're all solicited all the time with phone calls and emails from various organizations that we may have never heard of. So it's really a bad idea and poor judgment to just give blindly to someone just calling you over the phone because you don't know if you're doing good. Like you said, you're not sure if the money that you're giving is going to its intended purpose. So first and foremost, have a connection with the charity that you're passionate about as a starting point. There are a whole host of resources and tools that are out there that you can use to do your due diligence. Certainly the organization that typically regulates charities in a particular state is the Charities Bureau of the Attorney General's office. So certainly go to their website. There's a lot of tools there in terms of tips and information in terms of giving and how do you screen charities and nonprofits organizations, as well as certainly avoiding scams that are out there. But there are also other tools if you certainly serve on a board or volunteer for a nonprofit organization that give you tips on best practices from a governance standpoint. What are some of the things that you should make sure in terms of policies and procedures that your nonprofit has in place to make sure that they are working efficiently and adhering to the principles of good governance. As a donor, as far as resources that are out there, there's organizations such as GuideStar, a Charity Navigator, and the Better Business Bureau. All three organizations compile thousands of information on thousands of nonprofits, financial information, as well as what their policies and practices are, that will help you make in that decision making. So I would strongly encourage individuals to utilize those resources. Charity Navigator, for example, has a rating system for charities. The Better Business Bureau has the Wise Giving Alliance that use their own metrics in terms of rating and ranking charities. In addition, one of the key metrics that individuals focus on, as you mentioned, Gary, how much of my money goes to the intended purpose, right? The programmatic purpose versus the supporting service purpose. So in the example that you mentioned, Salvation Army announced that they give at least 90% of the dollars they collected on their programmatic activities. They only spend 10% on their supporting service activity, which is a remarkable ratio. In New York, for example, the New York State Attorney General recommends a minimum guideline or a split of 65%, 35%. That's the bare bone minimum. That's certainly not a ratio that organizations should strive to get to. Just get over, like in school, you want to hit that 65% passing mark. You want to go for the hundreds or close to 100 as much as possible. So when you think of different organizations, when you think of pure fundraising organizations, right, they simply collect money and give out money to other charities to continue their good causes. I would expect a ratio of 90-10 at least, for those types of organizations. For organizations that do their own programmatic activities, that have, actually a social service organization or the like, that actually have programs and that have salaries and so forth that use to support those programs, I would venture a guess in the 80 to 20% range would be, a good ratio. And when you start going south of there, that certainly causes concern in terms of how efficient they are with utilizing donor resources.
It's one thing that's very interesting is that the ones that perhaps the ratio is not as good as we would like it to be, they're not breaking any laws. I learned early on in my career that if I wanted to start a charity with you, we could do that. It doesn't mean that we can't get rich off of it. We could give each other, $500,000 salaries if we wanted to, and give maybe 10% of the money that comes in to the so-called intended purpose. So I think it's stories about organizations such as those that cause people trepidation right now when they want to give.
Certainly, we're seeing from some of the feed in terms of, some of the compensation that executives and other senior leaders of nonprofits receive. At the end of the day, a nonprofit that carries out good governance, should make sure that they are doing some type of a compensation study, right? So the larger ones certainly do compensation studies on a regular basis to make sure that the salaries that they're paying their executives are in line with organizations comparable to their size. There's always that challenge in the marketplace because you're competing with the for-profit sector for good people and strong leaders. So the salary, has to have some relativeness to the market. But you're 100% right, and folks out there are 100% right that the salaries should not be out of line. So, for example, Gary, you mentioned if someone's paying $500,000 salary, it should not be for an organization that's collecting $1 million on an annual basis. That that ratio would seem obscene and would cause concern to me. And the IRS has rules and parameters. When that type of practice is uncovered, and it would have significant penalties not only to the organization, but to the individual and to board members that were responsible for the oversight of giving out such compensation. So, when you do undertake that path of giving out excessive compensation, just be wary that there are repercussions to those individuals and those organizations.
I would presume, and you obviously would know this much better than me, that if an organization is established as a 501c3, they have to report publicly. There's got to be a public record, I would imagine, of the salaries.
Certainly. So a 501c3 organization is required to file a Form 990 with the Internal Revenue Service, and certainly also with their State Charities Bureau. Depending on state by state, it would vary depending on the specific state's requirement. but certainly from the Internal Revenue Services standpoint, they're required to file the Form 990. And the Form 990 discloses compensation of the top executives. So that's all public information out in the public realm. So, organizations are certainly mindful of the numbers that they're paying their, top executives, because ultimately, they will be looked at by outside entities, donors, grantors, funders, watchdog groups like GuideStar, Charity Navigator, that also look at that in calculating the wherewithal of that particular charity. So it's all public information here.
One of our chatters here, John, says that when he donates, he does it where he lives and directly to the place. That way he knows it's going where it's meant to go and not lying in the pockets of someone. In other words, he does his due diligence in person.
Sure. And that's what I mentioned, that having that personal connection. So, I'm involved with, my religious organization. And, one thing about giving to religious organizations, it's always tricky because, they are not required to make their financial information public. It goes back to the whole notion of, our country being founded on the principle of separation of church and state. So they're not required to file a Form 990 with the Internal Revenue Service, which means getting financial information from religious organizations is certainly difficult. Now, there are ones that are out there that make that information publicly available in the whole umbrella of being good governance and good stewards of public resources. And certainly others that you can ask them for financial information to see if they'll give it to you. But I do my own diligence. I'm inherently involved, and ask questions in terms of where monies are spent and the like, and certainly would ask for financial information. So I completely agree with John. Having that personal connection and doing your own due diligence is the best remedy to avoid or minimize the chance of any improprieties.
One of the points that you made a few moments ago is about the fact that we get deluged with emails and phone calls from people who purport to be representing charities. And Brian writes in the chat that he does not trust people calling for donations to organizations such as the police, the firemen, or breast cancer, basically because he can't verify, I guess, who it is who's calling, whether they are who they purport to be, and whether it is really a charity that's doing good works, or even if it is tax deductible.
Yeah, no, I couldn't agree with Brian more. Giving to individuals, organizations that call you out of the blue over the phone, I would strongly discourage individuals from contributing to those organizations unless you've had a chance to do your own due diligence. If you get those unsolicited phone calls, if you want to be, obviously we don't want to be rude and hang up on people. So certainly ask for the information. Say, can you give me your name and address of where you're located? I'd like to do a little bit of homework before deciding to give. And if they're really who they are, what they are, they'll share that with you. If they're certainly abrupt and curt and want to get off the phone, then that would lead you to believe that maybe it was not legitimate. So I would fully agree with that.
So since you are a CPA and your expertise is in nonprofits, let me steal some of, hopefully I don't get billed by asking this question, but what are the tax advantages to giving to charities?
So certainly, if you itemize, when you file your taxes and you itemize, you certainly get the benefit of taking a tax deduction. Now, when the Tax Reform Act came out a couple of years ago, when they increased the threshold for the standard deduction, it significantly reduced the number of individuals itemizing on their tax returns. So one of the biggest concerns that came out is that, would people stop giving or give less because that tax advantage for certainly people that don't itemize deductions, is now taken away, if you will. Or they don't have that benefit of that tax deduction. What we've seen in practice is that it really hasn't had any kind of significant impact whatsoever, that people are still continuing to give, whether they get the tax deduction or not. Certainly if people are giving you $500, $1,000, they really want to give because they believe in the cause. When you start getting into the hundreds of thousands, $1 million, that's where more of the tax planning, if you will, comes into play. But certainly, if you do itemize on your tax return, you get the benefit of a tax deduction as well.
Whether you get that tax deduction or not, there's a great feeling when you help out.
It's priceless. Absolutely.
Yeah. Well, I know at this time of year, people seem to be, not just because of the tax advantage, but because it's the season. You know, all the great religions seem to make the end of the year uh, the spiritual moment where people want to give when otherwise they might ignore people in need. So I know this is a very big time. You know, we talk about how big this time is for the retailers, but it's a big time for the charities as well. It could make or break a charity, I would presume.
There's always a big push for year-end giving the year-end appeals, and certainly with the environment that we've been in the past 2 years, certain charities have struggled. So that makes this push even bigger to make sure that they've got enough resources to continue to operate for the following year at least. So this is the time of year when people are in this, like you said, in the spiritual mood and the giving mood, that nonprofits and other organizations look to make that last push for year-end numbers, certainly the ones that are operating on a calendar year basis.
Well, to that point, last week I interviewed Major Jim Betts from the Salvation Army. And of course, the inflationary spiral and the supply chain issues that you and I are dealing with affects them as well. And they are struggling to meet the demand. And of course, as you know, and I know, the Salvation Army will do whatever it can to help people within its means. And so I was happy to have them on to talk about that. And I'm sure they're not the only one. I'm sure all of these charities are really struggling this year. And that's another reason why people ought to be giving.
Yeah, absolutely. As we've seen, inflation is beginning to take a toll on people's pockets. So, what may have cost 2 years ago is much more expensive these days, whether it's food, clothing, and shelter. Rents have gone up, housing goes up. So whatever the cause is, it's certainly more expensive. So the dollar that you gave 2 years ago is not going as far as the dollar that you're able to give today. So certainly, charities are looking for an increase in the dollar amounts that people have historically contributed.
Amish Mehta, who heads the nonprofit practice at Friedman LLP. And for those who are interested, since you could spell Friedman several ways, it's with the IE, FRIEDMAN. Thanks for joining us. I'm hoping that people really enjoyed and got something out of this conversation.
Thanks, Gary. Again, pleasure to be with you today, and hope everyone does their due diligence and go out and give.